Well, the U.S. Central Bank, the Federal Reserve, or the Fed, has reinforced its inflation fight by raising its key interest rate for the seventh time this year, albeit raising it by a smaller amount than it had done in its past four meetings. Despite the slower rate hike, the Fed is signaling more hikes to come. On Wednesday, the Fed announced a 50 basis point rate hike, which is smaller than the 75 basis point hikes it had done in its past four meetings. The smaller rate hike comes as data is showing that U.S. inflation is continuing to ease. In November, consumer inflation slowed for a fifth straight month to 7.1% year on year, which was sharply below a recent peak of 9.1% back in June. Despite slowing inflation, though, Fed Chairman Jerome Powell said it will take, quote, substantially more evidence to give confidence that inflation is on a sustained downward path, end quote, hinting at more rate hikes. Now, the Fed forecasted that their key short-term rate will reach a range of 5 to 5.25% by the end of 2023, well above market expectations. Now, that suggests that the Fed is prepared to raise its benchmark rate by an additional 0.75 of a point and leave it there through next year.
The committee decided to raise interest rates by 50 basis points today, a step down from the 75 basis point pace seen over the previous four meetings. Of course, 50 basis points is still a historically large increase, and we still have some ways to go. The inflation data received so far for October and November show a welcome reduction in the monthly pace of price increases. But it will take substantially more evidence to give confidence that inflation is on a sustained downward path.